presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, look who we have.
It's a beautiful day. Get our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, it went up to $420 last night.
Now, Tom O'Brien.
Hi everyone, this is Basil Chapman sitting in for the one and only Tom O'Brien, having a well-earned break, and we're looking at the Dow up 329 at 27,157. This is in leg C. Let me just do this really quickly so that you know what I'm talking about for those of you new to my work, because I have the Tiger Technicians Hour, noon to 1 p.m. Eastern Time every market day, and my newsletter, The Opening Call. What I try to do is to identify the lowest low bar and then merely count each successively higher peak. Can go to 7 higher peaks, A, B, C, D, E, F, G, alphabetically in order, but it's at that fourth highest peak that other things can happen. Not that it couldn't go higher, but that's where you've got to have a little bit of caution, because we can sometimes get the sharpest decline. In the little corner over here, see how the Dow went from 27,580 down to 24,843. I would say that was quite a bit of a pullback. That was at a peak D. All right, and then the other patterns we'll look at, but that's really the most important thing that I want to look at right now. So I'm anticipating that there's a really, probably about a 70% chance now that we will get close to a leg D in the daily. Does it tackle the 27,580 level? Well, there's another technique that I use called the Chapman Wave Inside Track Repellent Zone. Look how it repelled the price. Now it becomes a support level. So it says, with this big spike today in the Dow, up 325 points at 27,153. This is where you can expect with the MACD just about across. Oh, it did. Right now it's crossing positive. That's a good sign. And the stochastics, okay, it's not great. It's 61%. The blue line, this unbalanced volume, really strong. And then the weekly chart has this rectangle formation. My expression is, a rectangle formation, a narrow rectangle formation can last a lot longer than your patience. You want to see how? Look at this. This is the E-mini. We've been in the 10-minute E-mini, S&P E-mini, in this trading band, basically between 33.23 and 33 about 10. Look at this, going all the way back to 3 this morning. This is a.m. Eastern Time. We've been in this narrow range, and that I'm going to speak to in a moment. Why? Because it's telling me that it's becoming even more selective, and I'll talk about that as soon as I can get through all these numbers. And what we want to see is, does the Dow get some kind of leadership now as the NDX 100 is resting? And we'll go into that because I first want to show you the S&P. SPX is trading right now at 33.24 at a high today of 3,330.77. Can you believe we're talking about 3,300 and we were at 666 in March the 9th of 2009? Well, anyway, so this is now leg G/C in the daily chart. The MACD is good. Stochastic is very good at 92%. And the leg E in the weekly chart is very good. I'll try to get to the monthly charts as we move along, but mostly what I wanted to say is that it's the QQQ that has been so spectacular up until now, leading the way. The Index 100 is really the top 15, top 20 stocks, and certainly the top 5 or 6 have been absolute monsters. They have the gross national product of some countries. Not the point. The point is that we're about to make, with a high today of 271.52, there's a chance we're making a little doji candle here. The MACD is just barely crossed positive. It's way underneath where it was when the price was much higher earlier. not much higher, was higher earlier, like in mid-July. But look at this. The stochastic is actually quite good at 89%, and the on-balance volume is good. So we're going to have to let price tell us what's going on. Most importantly, we finally got that D. We've been waiting a long time to see if there was a D in the weekly chart. We've got that D, and how it closes on Friday. Friday is 2 days' time, two and a quarter days' time. So that's going to be very important. So let me just do a couple of other things here. And we've got callers waiting. I'll get to them in a moment. IWM, there's that leg D. Look at that leg D from peak D on the 8th of June at 153.39, plunges down to the 133s. Had a good rally. This is the wide rectangle has a different pattern, has a different formula, because there it takes a while to get back, but it usually goes back to right on or just above the previous high, and then you got to be careful. Where are we now? 153.50 is 11 cents higher than that last high. This is where I say, okay, now you got to be a little bit careful, but I'd love to see leadership, because in the weekly chart, the narrow rectangle, it's taken 6-7 weeks to get back to that level. Well, if it decisively takes it out, all of a sudden this ugly candle from the 28th, the week of the 28th of Feb, with a high of 162.91, that becomes a focal point. So this is going to be important. Does the QQQ start to stall here when, or I'm going to show you some of the charts in a little while, but does that stall while you see some leadership? Is there a rotational correction? So now we're going to have the Democrats and Republicans, they're talking about the, extending the 600 per week. What's interesting is that they might just have the stall, because this is the market will not cascade lower. It could have a sideways move, but it won't cascade lower unless there's bad news. I have a thing called the Chapman Wave. Here we go. Dark news cloud cover. I had a webinar on this. And my question was, are we here? Are we matching this particular point right here? That was from the August of 2019 daily chart, pulls back, has a little high-level consolidation, and then it pulls back, but it doesn't take out the low that was made in August. Are we a year later? Are we looking at the same thing? That's what's going to be very interesting, because to get a serious decline, look at this. This is the decline that started from February of this year. I think that was a decline of 39%, and that was a heck of a decline in the Dow. So I don't see it twice in a year. Do you think it's going to do that in 6 or 8 months? No, I think it'll be a much minor pullback if there is. I just want to do this quickly before we go to callers. Gold at GC is what I meant to type in. Oh, you've got to hit the right key whenever I go there. Okay, there it is. Goldman Sachs right now. Gold is up $31 at 2,052. I had a high of 2,070. Breaking out. The MACD is good. Stochastic is good at 89%. And look at this. There's your leg D in that weekly chart, leg E in the monthly chart. So I think if there is a pullback, it'll be a high-level consolidation. Look at silver as we go to the break. Silver is up at a new recovery high. Very strong, up 1.06 at 27.09. And the poor old dollar, we're going to see what happens in the next few days with the dollar. Dollar's come off the low. It didn't double. It made a double bottom. We're going to be talking about this, and then we'll be back with our first caller. We've got. Where did he go? We've got a caller. We've got Mark, and we'll go to him since we get.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, Basil Chapman. I'm the host of the Tiger Technicians Hour at noon to 1 p.m. every day, and every market day, that is. And my newsletter is called The Opening Call, very comprehensive daily newsletter. And the Dow is up 310, and we're going to go to our caller. We've got Mark in Fort Collins. Mark, how are you?
Good, Basil. How are you?
I'm well, thank you.
Excuse me. I had a sneeze. Sorry. I went long U.S. Steel when it held the left side low of a few weeks ago.
658 on the 9th of July. So yeah. You went long just above that because the low was 663, yeah, I think it was. Yes.
680s. I'm in the 680s. So, what are your thoughts?
So this is really important. I've been following this, of course, very closely. And for subscribers, we've had this periodically, sometimes successfully, sometimes not. But most importantly, we are looking at whether in this particular phase that's coming up right now, it should be starting this particular week. I think last week was 2 weeks ago was very important for the NASDAQ. And then this past week has been a consolidation in many of those stocks that led us up for the NASDAQ, and now they seem to be consolidating. Will fund managers, they don't usually do it instantaneously. It usually takes a little while for the one sector that's been really strong to start to weaken. They don't have to crash, but they need to weaken somewhat or not make new highs. And then fund managers start looking for the sector that's failed. And this goes into the cyclical. Now, this is more a deep cyclical. I think probably Alcoa, aluminum is a much more current beneficiary if there's any improvement in the economy. So the deep cyclicals like the steels, I think if ever there was an opportunity for a double bottom in a U-shaped formation that has had a successful H, and what I mean by that, I wonder if I can just get to this chart very quickly. So what I will do is I'll draw the arch so that people looking know exactly what I'm talking about. There's a pattern that I call the lowercase h. It's the dreaded H, because when the price pulls back, this is almost like a dreaded H right here. It's a very high one, but it's still an H pattern. What happens is you come off a top and you pull back very sharply, and then there's a bounce. Usually it's a peak A or B, and that second peak fails and it comes down. Not just testing the left side, it breaks the left side That's why it's called the dreaded H, because once it starts, it can go down very deeply. In this particular instance, 6.58 in U.S. Steel X is the symbol, trading at $7.39, up 26 cents right now, held by being just 7 cents higher, or what was it, 5 cents higher, 5 cents higher. 663 was the double bottom on the 31st of July. And on the 3rd of August, the next session, it had a double bottom at 6.63. I love that kind of pattern. I love the fact that the MACD didn't go lower. It did pull back, but it didn't go as low as it had when you made the low on the 9th, not you, but the United States Steel. And the stochastic was a little bit higher. I don't like the fact that I didn't get a nice V-shaped turnaround in the on-balance volume. But I think your risk-reward, having gotten in, and now you've got like an 8% or 7% gain, I think that's really good. And in this particular instance, I wouldn't even advise you to do anything else but to hold this position. And if today's Wednesday, I keep thinking it's Thursday, it's Wednesday, if by Friday, U.S. Steel has not gone under $7. It's held that. And in fact, let's imagine that tomorrow it pulls back a little bit. It actually makes a peak A here with no new high tomorrow. And then on Monday or Tuesday, it actually starts a leg B up. I think that will improve a lot. The MACD should be very close to turning positive. So I think your risk reward now is the best that you can have if this turns out to be a successful test. And at the same time, we start to see some weakening. No, it doesn't have to be a smash, just some weakening in those major stocks in the Index 100, the QQQ series. If money starts to come out, it'll be looking for places. And invariably, they start off with the least expensive, because I don't want to make an expensive mistake. So they start off with the lower price stocks. I think that's just, in a sense, what we're starting to see in the IWM, why it's doing so well here. Look at this. It broke above the 153.39 high. It is leg D, but at the same time, the MACD and stochastic in both the daily and the weekly charts are really good. I think we might be seeing some rotation, and if there is a rotation, that's going to be very good, because it means that you don't have to have very, very bad news to just push this market down day in, day out, with the futures opening down, the S&P down 15 points, tries to rally during the day, and then it closes down 20 points, and the next day it's down 15, tries to rally, down, closes 25 points, and then the bad news just starts filtering. And so this says to me, we could be looking at some kind of a rotational correction that allows some of those cyclical stocks to move. And I think you've hit on one, because it did exactly what you want to see. It held the left side low with better technicals. It gives it the opportunity to at least have an H to a lowercase m pattern, and that still takes you into the eights. I mean, that's, even as a trade, that would be nice. But if that breaks, if there is a close in the next 2 weeks, a close, not above 820, which was the high, I'm going to make it about 835. That'll be really positive and say, you know what? You've now started a leg B in the new count of the weekly chart. And I'm just going to make it as simple as possible. A close below 658 just negates that, and obviously it'll be coming down sharper. I like what you did.
Well, thanks to some of your teaching, so I appreciate it. You also kept me in CX, so I appreciate that too. It's still
very good. Congratulations on that. Very good. So thank you very much for your call, Mark. I appreciate it. And so, folks, if any of you are interested in my opening call, my daily newsletter, this is the newsletter we've been along in one form or another from March the 23rd, the very low, the day of the low of the market. We went long via options, and then just within days we went long the diamonds. That's the DIA. And we in long from just under 21,000, and the Dow is trading right now at 27,100. And some of our long positions are still working very nice. We had one that made a new all-time high yesterday, just missed it today, and got one new stock that's unusual, not to us, but unusual to many people in this environment. It seems to be holding well. And in fact, I'll talk about one that I think is really important. I don't use this as a trade, just use it maybe as a benchmark. It's called the IAI, the iShares Broker Dealer Index. it's testing. There's a pattern that I call the Chapman Wave Inside Track Repellent Zone. You can see this dashed green line, the daily on the left, in the middle is the weekly, on the right is the monthly. And whoops, do I have another caller? Is that another caller? I didn't see that, or what's going on? Hello, is there another caller there? No, okay. So what we're looking at is this second line is the zone. I call it the Inside Track Repellent Zone is declining, and it's joined recent lower highs. And it says if the IAI is able to break above this green trend line right here, there could be a rally, and that rally could go quite a bit higher. Certainly if it can close in above 63 in the next day or so, that'll be a big positive. And then what you've got is the same rectangle we've been looking at in all the other charts. Look here, there's the rectangle, and it means you could have a slow move to the upside. But it is a broker, a dealer, and it has very low volume. So don't use this as a trade, but as a position, we've had it for a long time, since the day after the market low. We'll be back in a moment. Basil Chap.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN has developed a daily programming lineup for traders by traders. We start every trading day live at 8:30 a.m. with Tommy O'Brien hosting the morning market kickoff as he starts the day off by breaking down everything you need to know about what's going on for the trading day ahead. At 9 a.m., Larry Pesavento takes your calls and questions live on the air for the opening bell as he hosts Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the Bull Bear Trading Hour. At 11 a.m., it's Kevin Hinks and Alex Coffey from TD Ameritrade Network with Fast Market, Basil Chapman at noon with the Tiger Technicians Hour, Steve Rhodes hosts the Trader's Edge at 1 p.m., Dave White with the Power Trading Hour at 2 p.m., and Tom O'Brien closes out the day for the final hour of trading live from 3 till 4. Don't miss a second of our daily programming lineup. Tune in to Tiger TV every trading day live at TFNN.com. Educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
There are a couple of things I just wanted to go through now, and I thought I'd do this because I like to look at everything that I can. I like to assess it. I've done this for so many decades that I've built a whole repertoire and a whole a panoply of different techniques. Look, there's this rectangle formation. We are still in the middle of this rectangle formation since 3 a.m. this morning. That's how long, I always say a rectangle formation a narrow rectangle formation can last a lot longer than your patience. So anyway, I wanted to do this. I mentioned it yesterday that I'd be touching on it. I think it's important. It has nothing to do with who you should vote for. Just not my business. I couldn't really care about that, who you vote for. What I want, in the den, one of the denners brought up something and said, like Basil says, by the time the politicians get to do something about it, the horses left the barn. So in that context, let me show you a couple of things that I think are really important. When everyone was talking about the border and the border wall, I remember having one of my programs, I said, as far as I can tell, the border wall will never be an issue. It is done. There will be fewer and fewer people coming into the United States. I had no idea what the reason would be, but I just figured that the way politicians, when it becomes the buzzword, it's done. So let's just look at things. You know how you have politicians constantly talking about gun violence, and then they talk about, and remember, I like to relate everything to the market. So this is not politics. This is the politics of politics. So gun violence. So let's just have a look at something. If you don't want gun violence, then perhaps you should deal with it in a very different way. Look, RGR, Sturm Ruger, firearms, etc. Just have a look at this. Is this the pattern I wanted, or is it Smith & Wesson, SWBI? Yeah. So look at this. During the Obama years, Smith & Wesson went from $2.04, and it went where? Wait, let me go back, because remember, Obama had two terms. So Smith & Wesson went from single-digit lows to 22, and then it comes back down again. And then it goes from 2 to 30. So you say to yourself, wait a minute, that means that every time it was discussed as a really big issue, a lot more people went out and bought guns. So I don't know how you resolve this. I'm just saying this is the reality, right? And in the Trump, as soon as Trump comes in, it goes from around about 25 down to $5. And now, because we've had this whole resurgence of nervousness about all sorts of things, look what's happened to the price. It's gone from $5.41 to today's price of $26. So I need to point this out. This is the market. This is a viable stock. I mean, you can buy it or not buy it. It depends if you have morality and you say, I'm not going to buy something that's a gun. It's against your business. I have nothing to do with it. I'm only telling you about the price. Isn't that interesting? Now, wait a minute. I mean, I read just a few days ago, I was trying to find the article. Maybe I'll do it in my show on Friday when I do an intense Chapman Wave methodology kind of review. I'm going to look and see if I can find it. But I read that this is not just the quietest period in decades. They don't know. They can't even go back far enough to see how quiet it is. Can you imagine the horses clumping in the streets of New York in 1910 or 12? Can you imagine when the automobiles, those loud automobiles came along, right? So let's look at this and be as practical as we can. And we say, wait a minute, so is this what it takes to become the quietest nationally? This is right internationally. This is across the world. This is the quietest period we've had. But wait a minute. If the politicians that are talking about global warming are not talking about global warming now, what they should be saying is how successful coronavirus has been, because that's what it takes to get, first of all, the quietest period in a century, but also the least pollution, I believe, in over 50 years. So you have to understand what it's going to take. It's a huge thing. to change, and it's because nobody's driving. You go out in the streets and downtowns all around the country, empty. Boston, where I am, Newton, where I live, empty. So how do you put this together? I don't know. This is not for me to put together. I'm just telling you that it's very interesting that we aren't hearing much about people saying, well, global warming this and global warming that, because they don't really have anything to stand on right now, because look what we've got. We've got the least global warming right this moment, or at least the measurement that you can take from what I've read. Maybe I'm going to be proved. I'm going to get some mentions about over here and over there. But all I can say is that, and that's the other thing. I have friends in China asking the skies to stay so blue. That's the other article I read as well. This is the bluest skies that you've seen in many countries around the world that really had terrible pollution. So need to just get that out there, because I don't know, you know what you're going to make with it. I'm just saying this is the reality of what's going on right now. So I've done that. I don't need to do, maybe I won't have to do it at all in one of my segments of my opening in my daily Tiger Technicians Hour. Let's get back to the market. So SWI, not at an all-time high, but at a recovery high, huge. And there's only a leg C in the weekly chart. It says, there's still more to come. And more guns are going to be bought. All right, so that's that. Now what I wanted to do is to say, go through the different sectors. Look at crude oil. Crude oil broke out today, had a spectacular run from the rectangle pattern that I drew. It went above it, and now it's back inside it. But what's really important, it hit 43.62. Here's your D. You remember how important Ds are, D or E? Well, we've got to leg D in the daily chart. I happen to like this very much because it's telling me that there is economic activity somewhere. Also, if you look, none of this chart here, but this, nope, so it's right here. In this chart that I'm showing you, see the black background? So this is the yields. This is the 30-year T bond yield, the TYX, the white. The brown is the TNX, the 10-year T note yield, and that's gone to a lower low than the left side low back in April. And the 5-year cyan color FVX, 5-year T-note yield, has gone to even lower low. The 30 hasn't gone to under 12.42, 1.242. That was the low back in April. But this is what's going to be very, very interesting, because these yields are produced. You see this chart here on the right at the bottom? The HGX Philadelphia Housing Index, 378 was the high in February. Plop, 100 points down, more. It goes to 175.41 in the week of 27th of March. That was when we made the low. And look, it's come back. Look at those green bars. It's in leg D at 3. Right now it's trading at 368. That high in February was 378. But look at wood, the International Global Timber and Forestry ETF. Look at that move. And that's a good sign between copper and this, wood and oil.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Hi, folks. Basil Chapman sitting in for the one and only Tom O'Brien. So Roku comes out with earnings after the bell. Roku trading right now down 59 cents at 165.85. You see, how many stocks have we looked at like this? The peak C that was made in Roku in the monthly chart at 176.55. Trading right now at 165. It needs to just pop 1 penny above that peak C way back from last year, and it starts leg D. That would be leg E in the weekly chart, extending. And look, yeah, you got your rectangle formation. You've just gone above it. So it's going to be really important. Roku, streaming devices, it's just telling us about part of the economy that for some people, it's very important. They have to cut the bills. Comcast and Verizon, these bills are extremely expensive. And people, need to keep going, and they want to keep in touch. So they're using all these different devices. So we'll see what happens. So if Roku, I'll just tell you right now, if Roku comes out and you see it trading overnight in it's trading 165, 172 area, and it holds all the way through the conference call to this evening or whenever that is, and tomorrow when the market opens by 10 o'clock in the morning, half an hour after the 9:30 opening, if Roku is holding above 172, that's going to be a good sign. It's going to be a good sign for some other things as well. If all of a sudden it goes back into the rectangle and it's trading under 160, it says not quite what they expected, and you'll see what happens. But look at this, all-time high as we speak is missing just by 6-7 points, and there are a lot of stocks that are either making new highs or very close. Another one I thought I'd just mention, I haven't looked at this for a little while. I didn't realize it had earnings today. ARWR, we have someone in the den who's always talking about this. So this is pulling back. This is Arrowhead Pharmaceuticals. Went to peak D in the daily all the way to just in a month and a half or something. It goes from 30 to 50. Oh, 52 round number. Why don't you tell me about the round number? I love round numbers. F52, a round number high for the daily. All right, well, we'll see what happens here. So this is in that area, the biotech area. One other thing I want to look at you. Just give me a second to glance through here. All right, BDSI. BDSI is another one. I didn't realize it was coming together. It was later in the week. Yeah, a lot of these biotechs have had spectacular moves going from under 2, just low single digits. They look like gold stocks right now, having gone up to 7. And now they pull back. So this is one of those. So there are a couple of things I want to look at here. Gold is if you look at pure technicals and you say, I don't know about the dollar, I don't know about the euro, I'm just looking at gold. This is the gold contract itself. That's GC. In other words, it gets smoothed out. The price I give you now, if you look at it in a month's time, it could be smoothed out, but the high and the formation will be perfect. Just the price will change. So when you see it with such a strong leg D, the fourth leg up, and the MACD is still expanding and the stochastic's at 93%, you have to look for other clues to say, wait a minute, is this getting a little toppy? Well, you see this weekly chart in the middle, you see this little red sign here? That's relative strength. And the relative strength is probably at about 78. I've just decided not to have those numbers show, otherwise it's just too many numbers. The 93% on the slow part of the MACD is what I like. So a slow part of the stochastic is fine, but this is just red. And it says, hey, it's getting on the relative strength index, it's getting a little overbought to what it usually does. The last time it did that was right there, and that's where you got that peak D in March and you plummeted down. So all I'm saying is that this is saying to me, you're getting a little toppy, but the technicals are still saying that unless there's some reason, a fundamental reason that changes things in gold and silver, maybe the dollar does this double bottom. We just spoke about United States steel. Well, the dollar went to 92.55, the dollar index on the 31st, and today's low is 92.56, missed it by a penny. That's so far, we call it a successful Chapman wave dreaded H. That's not good enough. It needs to now close above the high that was made 3 days ago of 93.99. If it does that, that'll be a good sign for the dollar. But there's so much damage. You can see a lot of retesting coming about. But maybe that's what you see all of a sudden. I don't know how it'll happen, but if the dollar really starts to take off, that's going to be a little bit impactful for gold and for silver. But silver on the weekly basis is still only in leg C. I can't count it any other way. There's no alternate count, no nothing. It's in leg C. And that suggests that any pullback might take about a week or two, maybe even 3, and then it should try again for another new high. And this, I hate to say this is just only a leg A in the monthly chart. And at the same time, I am getting a little nervous when I hear every single report that's saying gold is the place to be, gold this, gold that, gold this. It just tells me that in some sense, there is the populace has just become a little too enamored with gold. Probably we're going to have some digestive phase. And if it's very quick and very steep, that's one thing. But if it's just gently making lower highs and lower lows, consolidating, going sideways between, I'm talking about the gold now, that would be the GC, between 1980 and 1930, that's a big percentage pullback, but it's nothing when you think of where we've been. So just if you are in these things and you're getting a little nervous, what I see in my show today and yesterday and the day before, I've been saying all of these stocks, like an Apple, if you're getting a little nervous because you're in it or you just got in recently, if you're in it for a long time, make sure you can sleep at night, that's all. You know, you should be happy as a clam, but if you're nervous about giving back gains, take a little money off. Take enough off to make it comfortable. Take a little, 10%, take off a little more. It doesn't matter. Just take something off for 2 reasons. One is psychologically, it's really good because you're in now command of the stock. You're deciding when you want in and you want out. And so that's always very good. It means the stock's not handling you, you're handling the stock. Well, of course, it went up very nicely. You didn't expect that, but it did and it kept going. But at the same time, you're getting some control and you're building up a cash position. And the other is if you take something off and it goes even higher with your core position, are you going to grumble? You're going to say, yes. Oh, it'd be nice to have a full position, but you know what? Don't be greedy. It's just common sense. This is money management. All right. With that said, what we're really looking at here is that there are a ton. I showed you the buy stock a little earlier, but the IBB, which is this is the Nasdaq Biotech ETF. It's made a peak F in the daily top. Daily, it has everything about it looks like that C should be a D. That I should have had something that I call the phantom peak right there. This is the look of a D. But in the meantime, it's at a C in the weekly chart, and it says leg D in the monthly chart. It just says, you know what, these biotechs have had a spectacular move. Maybe we're getting to the point where we might be hearing a little bit better news about the coronavirus. Maybe you're going to see a little bit of a pullback, but it's really the very small biotechs that I'm saying, I think now you've got to be a little more careful, very more selective, and a little bit more careful. So this is kind of my theme right now. It's not a harmful thing to take profits off when you can. Dave White always says, take it off when you can, not when you need to. I agree. I think that's the case right now. Just you don't get out of everything. Take a little bit off to feel comfortable. That's all. I'll be right back. Basil Chapman, Tom O'Brien Show. My pleasure to be here. I'll be back in a minute.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So looking at the list of the earnings reports after the bell, I see one is an old favorite, DDD, and I did a little work on this during one of the breaks. And it's got the rectangle formation. It actually is unfortunate that it's already gone from a low in the sixes to the sevens, gone to a peak D and even an E. But what's really important is that that rectangle formation will become a really good base of support if there is an earnings report. So this is 3D Systems. I like the fact that if you can get 3D Systems, trading right now at $7, up 16 cents, to have a good earnings report, it doesn't have to go immediately to the upside, but it's a really good sign. And you would think in an era like this to save money that a lot more people would be doing, a lot more companies would be doing 3D printing, but there is a lot of competition. But if this thing ever starts to trade in the 745, 755 area and can hold 720 support, I think that's a turn that you want to see. It's another sign, part of the economy. So that's what I want to say. And then just as we're about to wrap up, my show is always at noontime to 1 p.m. Eastern. That is the Tiger Technicians Hour. My daily service is the opening call. This is my daily news service every day. I've started taking Saturdays off, but for 18 years or something, I would do work on Saturday as well. I do the work, I just don't send it out until Sunday. Start the report for Monday on Sunday, and Monday I send the report. So it's a busy thing, but I'm very careful of what we pick. DDD was actually one of ours years ago. So that's important. So what I am looking at here is it the cyclical area that's going to maybe come on strong if we start to see some kind of a pullback? I love the fact I wanted the Dow to close at the high of the day today, and if it can, oh, it is. Now, this is a candle that I talk about, a Moroboza candle. It means that you've got no wick. You gap up, and then you fill the whole thing all the way with a nice big candle, and that usually says you've got maybe a little doji candle the next day and then a pullback, or the next day there's a pullback. If that's not going to be the tradition, instead we actually gap up tomorrow, that's going to be really important because that gets us near that 27,580 level for the Dow, and it says the Dow is actually now working well, gives the Qs a chance to pull back. Have a wonderful evening, and hope to see you tomorrow in my Tiger Technicians Hour, and have a great evening in any case. See you sometime soon.